and welcome back to Global Value. Today we are going to be looking at Palo Alto Networks Inc. We will be performing a fundamental stock analysis of the company by taking a look at its financials. Before we're going to get into the analysis, I want to introduce the company, look at where it's been trading. Even before we do that, I want to remind everyone of the 4 principles of value investing. Principle number 1. When you're buying a stock, you're really investing into the underlying business, and over long periods of time, your return on that stock is going to be equal to your return on that underlying business. Number 2, Mr. Market is there to serve you, not to educate you. Price does not necessarily equal value. Principle number 3, you need to maintain a sufficient margin of safety in your investments just in case you're wrong. By making sure you have that margin of safety on the downside, you'll have an even higher upside potential. Number 4, you need to stay within your circle of competence. This is going to minimize your chances of getting things wrong, but more importantly, it's going to let you have conviction to get things right. Now let's talk about Palo Alto Networks. The company is trading on the New York Stock Exchange under ticker symbol PANW. PANW. Currently, the stock is trading at $117.77. If we look at the 1-year chart, the stock is up significantly, up 74% over the past year. Going back to its IPO in 2012, the company has been a 10x, returning a 28% compounded annual return over the past 9.75 years, almost over the past decade. We can see that the company is trading about $19 off of its 52-week high, and quite significantly above that 52-week low. Palo Alto Networks is also a large company. Their market cap is almost $62 billion. As for background on the company operates in the software industry. Specifically, Palo Alto Networks is a pure-play cybersecurity vendor that sells security applications, subscriptions, and support to enterprises, government entities, and service providers. The company's product portfolio includes firewall applications, virtual firewalls, endpoint protection, cloud security, and cybersecurity analytics. Palo Alto Networks sells its products and services through its channel partners, as well as selling directly to medium and large enterprises, service providers, and government entities operating across a wide variety of industries. The Santa Clara, California firm was established in 2005 and sells its products worldwide. So let's get right into our fundamental analysis. For pillar number 1, we're looking at the 5-year average PE. We want this to be below 22.5. For Palo Alto Networks, we see that this number is actually negative, quite significantly negative, at negative 123.5 as their average. This means that they have had negative earnings over these past 5 years. So that's an X starting off on pillar 1. Pillar number 2, we're looking for a 5-year return on invested capital that is greater than 9%. Similarly to pillar number 1, Palo Alto Networks is in rough shape here. Over the past 5 years, they've had negative returns on capital, which means that they've been destroying value as a company. This is not a great sign to see, so this is another X on pillar number 2. Pillar 3, we're looking for revenue growth. This one's going to be a check. They grew their revenues from $1.7 billion in 2017 to $4.3 billion in 2021. So our first check coming in on pillar number 3. Next, at pillar 4, we're looking for 5-year net income growth. Unsurprisingly, given what we saw with their PE, this is negative, and actually they've increased their loss over these past 5 years. So not a great sign there. That's another X on pillar number 4. Pillar number 5, we want to make sure that the company is not diluting shareholders. We don't want the company to be issuing new shares. So we are looking for a decreasing share count over the past 5 years. In 2017, Palo Alto Networks had 90.6 million shares outstanding. In 2021, Palo Alto Networks had 96.4. So they've diluted shareholders by about 6.5% over the past 5 years. So that is another X. Through 5 pillars, we have 4 X's and only 1 check so far. Pillar number 6, we're looking for 5-year growth in their free cash flow. Free cash flow is cash from operations minus capital expenditures. In 2017, Palo Alto Networks had $706 million of free cash flow. They grew that to $1.4 billion of free cash flow in 2021. In between, in 2018, they had 926 million. In 2019, they had 924 million. And in 2020, they had $822 million of free cash flow. Taking a look on what they're actually doing with that money, over the past 3 years, it looks like they've made some pretty hefty acquisitions, spending a combined $2 billion to make cash acquisitions since 2019. So to understand the company in more depth, definitely want to dig into what those acquisitions were. Are they going to be value creating for the firm? And how do those acquisitions fit into the company's overall business strategy moving forward? So you really want to understand those things, as they were quite significant capital allocation relative to their free cash flow. For pillar number 7, we're looking for the company's net debt to be below that 5-year average free cash flow multiplied by 5. Averaging out their last 5 years of free cash flow, that comes out to $953 million a year, so just shy of $1 billion a year of free cash flow. And we want that $1 billion multiplied by 5, so $5 billion, to be greater than their current net debt. The company currently has net debt of $704 million, so that is a big check mark there. Good to see that the company is not highly levered compared to its cash flows. Finally, for pillar 8, we want the company's market cap to be below that 5-year average free cash flow multiplied by 20. So again, that 5-year average free cash flow was $953 million. Multiplying that by 20, that comes out to just over $19 billion, which is quite a ways away from this almost $62 billion market cap. So that is another X on pillar number 8. In summary, we end up with check marks on 3 of the 8 pillars. Palo Alto Networks has been able to grow revenues and grow free cash flows over the past 5 years. They also do so not utilizing a lot of debt. The company does not have positive earnings. It does not have a positive return on capital. It also is slightly diluting shareholders, and it's expensive relative to current free cash flows. So this kind of financial profile is not at all uncommon with some of these high-flying growth stocks. And even though this company may have, a bright future ahead of it, especially as cybersecurity becomes more and more necessary, as software keeps eating the world, this is a company that I'll be passing on, but I invite you to take a look at it and do your own research. That's it for our analysis of Palo Alto Networks. If you enjoyed the video, please be sure to like the video. Also, subscribe to the channel for more stock analysis videos, and comment down below what you thought of the video and what company we should look at next. Thanks for watching all the way to the end.